welcome back to the channel. This is Amy from iTradeAIMS.net, AIMS Stress-Free Trading. So today I'm going to show you how we can use the AIMS box indicator and its box levels, the high and the low, how they are actually very good support and resistance levels. You can use these levels instead of any other levels, and how I use them at the London Open, before the London Open, to establish take profit levels, use them as classic support and resistance, which is, you can avoid taking trades right next to these levels, or you can use them as target. So what I'm going to do for the purpose of this exercise, I'm going to go to a chart where there's no other indicator, so we can focus on the boxes only, right? So here we are. Now I'm going to draw a line here. This is the London Open. So suppose this is the London Open. This hasn't happened yet. What you would have seen is that this box level would not be here. Let me draw it. So this box would have been like so. Well, like so. And this space would have been would not have been there yet, because this box would be completed at the end of this candle. Let's delete that. So when we had this candle printed, which was 1 hour into the London Open, that is when you had two candles to the right of this candle. This candle has the lowest low, so it has two candles to the left, and the low of these candles are higher than the low of this one and the low of these two. So that means this is the box low. And so this level came into being, or came into play later. So the first two levels that were in play, were important to us, would be, so at London Open, this is interesting. We had a good discussion with Jas about this, an hour discussion. I hope I had recorded it. But anyway, I can repeat those things. So if you look at this level, that's the first level. So because Frankfurt Open, during Frankfurt 1 hour, because there's Frankfurt opens an hour before London Open, but we trade at London Open only. This was a bullish price action, which would indicate that price is going up. And on the M1 chart, when we go to that, you would be looking for long trades. But if you had identified this level, and probably let's go and identify the low of this as well. Now, if I color them slightly differently, or let's suppose the bigger dash is the upper level and then this is this one, then I would add one more, because this is, so I'm only interested in the box levels that are close to the current price. So around the London Open, this box level above the price and this box level below the price would be of interest to me. So now let's go to the M1 chart. I'm going to scroll back. So that's that London Open line. Let me change the settings for this so it goes to the background. If you click on this, draw object as background, then it goes behind the indicators. So let's give it that color. Okay, so that's our London Open candle. So you see this candle, as price started moving, price went up and it was strongly rejected at those levels. Now if you didn't have that line, it doesn't matter. It's just price, you see it. This candle itself is an indicator in its own. It told you a story that there were sellers at those levels. Price was rejected. Buying power was not that strong. It was done. But let me take you back to the hourly chart. As you can see, it was these levels where things had already happened the day before. So probably those sell orders were sitting there, right? So let's go back. As you can see, price was then, it was pushed hard to go down, comes down, then it gets rejected over here, so it doesn't create a a bear trend on the M1 chart over there, and then it's pushed up, and then it comes across this level. Now again, if we go to the hourly chart, let me give this a different style as well, so we can see the first one is bigger dashes, this is small dashes, this is the double type of dashes. Let me just actually go and change the color of it so it's easier. So this is yellow, it's this one. Oops, take it back there. And so if I go down there and get lost, we can see that price went up, hit the high of the hourly box high, and then it came back and hit the low. And as we can see here, there was a reaction at this level as well. Let me take you back there. As you can see, this is these lows. So obviously these levels played its part, and then later, after the close of this candle, which is the London Open candle, we had this new level at play as well. So let's give it a different color. And now when we go to the M1 chart, around, I think around this time, yes. So this is the close of the first hour. This level would have been created, not on the M1, but the H1 chart. And now I'm going to scroll to the right of the chart and see how market has reacted to these levels throughout the day. As you can see, it comes back down to it. I'm going to put a line on it and take you back to the hourly chart so you can see it. You can see this. So this has actually happened around 2 hours after this level was created using this. And then when you look at it, price actually comes down to it and hits it. So let's go back to the M1 chart. This is where we were. You can see price hits it. So if you had sold here, this ideally was your best spot to have your take profit level just above there. And then price goes up, as you can see, reacts to that level, comes back, retests it, goes down. Look at this again. Again, it bounced against it, comes down, and guess where it comes? Here, goes back up. Once again, around this level, it goes. And this is where I traded as well. I'll show you. Let's go back to the full chart now, actually. So I've kept these levels the way they are. These are the levels that I kind of created during the trading time. So these are the original ones. The ones on the other chart, I drew them for you right there. But this is the one that I used throughout the day to use. Let's go back here. So yes, here we can see. Now, I saw this reaction, and it was a reaction to this level and the level, that black line. But the profit wasn't enough, so I had my stop loss around here, just above the box. But then when I did the second push and then started going up, I was trailing the candles around that time and profit was good, so took it. And that's 345. Plus, the important thing was that there was confluence, right? Look at this. So when you have this first leg, and without touching the second leg, it comes very near to this. This means this is a 50% retrace. You can test that. So for me, I don't have to test Fib retracement, because when I draw Fib expansion, and when I draw from here to here, and then if I see that I without touching the second leg, price has terminated near the end of this, I know it's near 50%, so I'll draw it here just for you to see. So you can see 50%. Purple, when price comes back to purple straight away, it's usually 50%. So these are the chaos measures. As you can see, it hits target zone 1 and my exit is there. So I could have had my target point just above there, like take profit. So I would have exited probably 3 or 4 candles before. But at the same time, if you trail candles, sometimes, you could have just dropped around there another 30, 40 points, and that could have a huge difference. And as you can see, price comes up, hits these levels, comes down, creates another apple setup. Let's see how much this retrace. Probably more than 50%, but we'll see. Around 50%. That's good enough. We take another apple setup. This is the apple. Add on. Hits this level, right? Hits it again, can't clear it, goes down. But I was out on the second touch. Around here, comes back. This was my break-even position. So if I was targeting at least this level, if it got to that, that would be plus 38, plus 45, plus 56. This was good enough, but it didn't do it. Not around here, and dropped. So that's it. It was a small profit, but it's better than giving it all back. It's very important. If you have 1% risk and you go 1% in profit, you don't want to lose on that trade. And if you have 1% risk and your trade has gone 2% in your favor, you do not want to give back all the 2% back to the market. So the lowest on that will be 1%. Similar, if you have made 2% during the day, you do not want to end that day with a 0%. So if I'm up 2% and then I take a trade and it's a loser, I will be back to 1%. Then the market will have to do something very, very special to make me trade again, because the risk is that if I was wrong again, and which is possible, I don't have to be clever for that to win or lose. It just have to be there, a setup. So, and it could be a very good setup and I could still lose. So if I take that trade and I lose again, then that means this is not a good strategy. I have given back profit. If you follow this rule, your equity will stay consistently growing up with a smooth equity curve. So this is a very good rule to apply. And that's it. I wanted to talk about the support resistance levels based on the AIMS box levels of a higher time frame. No fancy support resistance lines and stuff, just using the market information that is printed by the market, not you and me. Because these levels that I identified, I did not use my subjective analysis. I just saw box low, box low, box high, box low, and I drew those lines and then dropped to the M1 chart. So anybody can do that. I hope this information would be valuable to you.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell